Hey guys, and welcome back to the seventh day of your daily dose of finance. This is an extremely red day. China just imposed their tariffs towards the US. So currently, the K-Web is pre-market down almost 8%, FXI 5.5%. This is crazy. And the S&P 500. Yeah, this is a little bit of my positions that I've taken myself. IQ, fantastic company, down almost 7% pre-market. AMD, almost 5% pre-market. One of the biggest losers I have on my list is Elf. It's down 18%, but not that much pre-market. And Under Armour as well. I think some of these companies are still good, but for Under Armour I would look forward to maybe track it down to tangible book value again, like it did before. And one of the big ones I'm looking at right now is Oprah, as we talked about before. I think it's great. I think it will do great. It has about 2-3% of the market share when it comes to browsers and other stuff. They're also going into crypto and that kind of stuff, so it might be interesting. But this one we're gonna buy under the 1,000 day, and we probably will get there with this kind of market. It's another, let's see, about 17%, 16% or so. But yeah, we're gonna take a look at just a short Warren Buffett video today because I have other stuff to do. But let's jump straight into it.
You mentioned earlier that Berkshire's shoe business was great, but that other shoe businesses were not so good. What are the uncertainties of the global brand leaders that the Berkshire seems to like? They like Coke and Gillette. The global brand leaders in the shoe business being Nike and Reebok. What are their uncertainties in terms of long-term competitive advantage, business economics, consumer behavior, and the other risk factors that you mentioned in the annual report this year? Thank you.
So you're really asking about the future prospects of Nike and Reebok? Yeah, I don't know that much about those businesses. We do have one person in this audience at least who owns a lot of Reebok, but I'm not expressing a negative view in any way on that. I don't understand that I don't understand their competitive position and the likelihood of permanence of their competitive position over a 10 or 20-year period, as well as I think I understand the position of Brown and Dexter. That doesn't mean I think that it's inferior. It doesn't mean that I think that we've got better businesses or anything. I think we've got very good businesses, but I haven't done the work, and I'm not sure if I did the work I would understand them. I think they are harder to understand, frankly, and to develop a fix on than our kinds. But they may be easier for other people who just have a better insight into that kind of business. Some businesses are a lot easier to understand than others. And Charlie and I don't like difficult problems. I mean, if something is hard to figure, we'd rather multiply by 3 than by pi. I mean, it's just easier for us. Charlie,
Well, that is such an obvious point, and yet so many people think if they just hire somebody with the appropriate labels, they can do something very difficult. That is one of the most dangerous ideas a human being can have. All kinds of things just intrinsically create problems. The other day I was dealing with a problem, and I said, this thing, it's a new building. And I said, this thing has 3 things I've learned to fear: an architect, a contractor, and a hill. And if you go at life like that, I think you at least make fewer mistakes than people who think they can do anything by just hiring somebody with a label.
Excuse me, go ahead, sir.
You don't have to hire out your thinking if you keep it simple.
You don't have to do, we've said this before, but you don't have to do exceptional things to get exceptional results. And some people think that if you jump over a 7-foot bar, that the ribbon they pin on you is going to be worth more money than if you step over a 1-foot bar. And it just isn't true in the investment world at all. So you can do very ordinary things. I mean, what is complicated about this? But, you know, we're $3 billion pre-tax better off than we were a few years ago because of it. There's nothing that I know about that product or its distribution system, its finances, or anything that really hundreds of thousands or millions of people aren't capable of, that they don't already know. They just don't do anything about it. And similarly, if you get into some complicated business, you can get a report that's 1,000 pages thick, and you got PhDs working on it, but it doesn't mean anything. You know, what you've got is a report, but you won't understand that business, what it's going to look like in 10 or 15 years. The big thing to do is avoid being wrong.
There's some things that are so intrinsically dangerous. Another of my heroes is Mark Twain, who looked at the promoters of his day, and he said, "A mine is a hole in the ground owned by a liar." And that's the way I've come to look at projections. I mean, basically, I can remember Warren and I were offered $2 million worth of projections once in the course of buying a business, and the book was this thick, and
For nothing.
and we were given it for nothing, and we wouldn't open it.
You know, we'd almost pay $2 million not to look at it. I mean, it's ridiculous. I do not understand why any buyer of a business looks at a bunch of projections put together by a seller or
his agent.
Or his agent. I mean, you can almost say that it's naive to think that that has any utility whatsoever. We just are not interested. If we don't have some idea ourselves of what we think the future is, to sit there and listen to some other guy who's trying to sell us the business or get a commission on it, tell us what the future is going to be, like I say, it's very naive.
Yeah, and 5 years out.
Yeah. We had a line in the report one time, "Don't ask the barber whether you need a haircut." And it's quite applicable to projections by sellers of businesses.
Hey, and welcome back from the video. Just a short one today. And this one was mainly about, for example, them not investing in Nike or Reebok. Of course, Nike has been doing well for many, many years. But they don't want to, well, they saw the economic risk of it. That's what they said, right? They had, like, because Nike is still a great company, it have had some issues lately. This video, of course, is long time ago, but right now Nike from November in 21 is down 70% on the stock, and it looks to be, on Seeking Alpha at least, estimates that they will be 50% down this year in earnings per share, then they're gonna be flat next year, and then they might have the growth of 33% in EPS, 6% in revenue in 2027. It's kind of interesting. So might have more and more downside on Nike, I would guess. But price to sales are getting down to 172. Price to free cash flow 15 at the minute. So yeah, it might be interesting. Nike is not going anywhere, I think, at the end of the day. But yeah, they saw economic risks of these businesses. But they were also saying that you should avoid complicated things. Fancy reports and projections from sellers are useless if you don't already know the business inside out. Like they said, not buying for the book that it cost 2 million to put together. What did he say? That you had a guy with a mind that you called a liar or something like that? It's kind of interesting for Charlie Munger. He said, don't hire experts to solve hard problems. Stick to simple, obvious wins instead of chasing risky, flashy bets. So the key takeaway from the video probably should be success doesn't need complexity. Buffett says you can win big by stepping over easy hurdles, not jumping impossible ones. So not choosing extreme, like, what did Peter Lynch say again? Like whisper stocks, stocks that hasn't really proved themselves yet, or companies that is not really earning money and that kind of stuff. So kind of interesting. But yeah, I'm gonna get going. We're gonna play electricians today, not play, but we're gonna do some electrical work. In this great sun outside, it's the weekend. The market is way down, but still, I hope you have a great weekend and a great day. And yeah, see you later.